Good morning. Thanks for your company. This Tuesday, the 15th of September. I'm Jessica Amir, market analyst with Bell Direct. Well, coronavirus vaccine hopes, electric car demand picking up in China, and tech takeover talks kick Wall Street back into buy the dip rebound mode. AstraZeneca resumed phase 3 trials after a halt due to safety reasons, and Tesla shares gained 13% after Goldman Sachs noted that demand was picking up in China, and they also saw app downloads lift 20% year on year. Oracle announced it will buy a large stake in a company called ByteDance, which is behind TikTok, and that sent Oracle shares up 4.3%. Nvidia shares also got a kick, rising about 6% after they announced that they'll be buying the chip maker ARM Holdings from SoftBank for $40 billion, and other chip makers rallied behind Nvidia. This helped the Nasdaq rise the most out of the major three indices, or major three benchmarks, rising 1.9%. The broad S&P 500 up 1.3%, and the Dow lifted 1.2%. On the commodity side of things, oil retreated ever so slightly. It's now at $37.26 US. Gold gained $17.20 or 0.8% to $1,965 US. And the Aussie dollar got a bit of a boost overnight, rising to an almost 3-week high, 72.91 US. Really, as the USD continues to come under pressure. What to watch today? Well, the focus will be, of course, on the RBA meeting minutes, expected to pave out how much bond buying the central bank has conducted since August in a bid to really stimulate the economy, encourage organisations to borrow, which will lead to boosting employment. We know the RBA is expecting unemployment to peak at 10% in August, and the bank said that it's going to do all it can. So let's see what that amounts to today. If you looked at the futures earlier, they were indicating the Aussie market will see a bit of a pullback. They were suggesting a fall of about 0.2% following that lift that we had of 0.7% yesterday. Companies going ex-dividend, transferring the dividend right to shareholders today to keep an eye on. Likely to see some selling include NWS, ING, PL8, PPG, CGR and DTL, all going ex-dividend. So keep those in mind. Looking at trading ideas that may be worth a look. Yesterday we mentioned Macquarie MQG lowered its expected net profit after tax to $950 million for the first half of this financial year. Now that's 25% less than the prior period. Overnight, Bell Potter then maintained that they're continuing to back the bank as a buy with a 135 target. UBS came out reiterating MQG as a hold though, but they increased their price target to 125, given that the company is operating on a higher profit ratio than its banking peers. On the speculative side of stocks, Aurora, a Biosurgery, their code is ARX. They're a soft tissue regenerative company for hernia and quite complex reconstructive surgery. They had their buy rating reiterated by Bell Potter, $2.10 price target, implying 61% upside from yesterday's $1.29 close. The company announced revenue will fall 9% this year, but Bell Potter reckons a recovery is achievable, particularly given its leading technology, Myriad, is being aggressively marketed, and its other products are continuing to grow market share. Saracen Mineral Holdings, SAR, may also be worth a look. Trading Central's data tells us SAR shares may rise from yesterday's close of 524 up to 640 to 670 over the next 29 days, according to standard technical analysis. Sezzle, SZL, may also be worth a look. Their chart is also suggesting that their shares may end their downward trend. That's also going off Trading Central's standard technical analysis principles. SZL also expected to see sales hit $1 billion by the end of this year, but I suggest that you do your own homework. Stay safe, happy trading.